Hi friends, welcome back to CAP classes. Once again, very good evening all of you. One of the most important area in auditing is evidence. Whether you are a student pursuing, a professional course, maybe it is your F8, AA, or in the professional level, AAA, Advanced Auditing and Assurance, evidence plays a major part of your knowledge, your syllabus. Point number one. Point number two, moving forward, after your exams, what will you do? Either you will join as an intern, whether you join as intern in any of the big audit firms like you call it RSM, GT, or Big Four, or you do in any local ACCA firm or any global firm. My dear friend, I'm telling you, whether you are an intern or whether you are an auditor, you promoted to be the auditor also. Big guy. Now you are a big guy. From the student stage to the intern stage to the auditor stage, evidence plays, my dear friend, a significant role in your life. So you should thoroughly know for two reasons. One, this is a high weight topic from examination point of view. From exam point of view, very important area. Even if it is not important also, keeping examination aside, this is going to play a very big role in your life as budding professional when you are trying to grow in your practice from internship towards profession. This plays a very big role. So when you are conducting an audit, now just visualize, you are conducting audit of Coca-Cola company, such a big company. So the day when you entered, one guy said, hey, you know what? We sell 2.1 billion tins a day. Then you're like, hey, wait, what? The employee of the company said, we sell 2 billion tins. You got a semi-heart attack. Eh? Then he said, we have facilities, we have manufacturing operations in 5,000 locations. 5,000, just I'm exaggerating, I know, just for the sake of example. You're like, what? We have assets in 150 countries. Our non-current assets base is so and so, hundreds of millions of euros. How will you verify that? How will you verify assets? How will you verify liabilities? How will you verify equity? How will you verify revenue? How will you verify expenses? How will you check profits? How will you check the presentation and disclosures? Now just imagine. So we have Nirmal with us. Nirmal, say for example, you are conducting audit of Pavan. Pavan is an individual, not an entity. You are the auditor. Nirmal, you are there?
Yes, sir.
So, Nirmal, when you are conducting audit of Pavan as an individual mentioned in his financial statements. When you open my balance sheet, under the assets side, motor vehicles. One item is there, motor vehicles. 32,000 pounds. Motor vehicles, 32,000 pounds. Now, Nirmal, you are the auditor. Tell me what questions you ask. What will be the first basic question that comes to your mind?
Is there a motor vehicle?
Okay. I said yes. Next.
Is the motor vehicle in your name?
So first you'll ask the model, no? So which car it is? Is it a van? Is it a car? Is it a truck? Is it a lorry? Is it a bus? What motor vehicle it is? So I said I own, say for example, one Mercedes Benz. So now what will be your next question?
Are you using it for the business purpose or for your personal purpose?
Because I am an individual, no? If you are filing my personal ITR, or if I am a sole trader, there is no difference between business and personal use now. So, but of course, to satisfy your question, I'm telling you, yes, I'm using it for business purpose.
I will ask the invoice.
Okay, so invoice, why do you need invoice?
For this valuation purposes.
Okay, so basically you are trying to extract evidence.
Yes.
You are trying to extract evidence that proves the accuracy of the value.
Yes, sir.
Do you need anything else? So how will you check the legality? How will you check my ownership?
The RC, the registration certificate.
Registration certificate you'll ask. Excellent. Excellent. Then how do you verify if there is any obligation attached to the asset?
Whether it is hypothecated or not.
Any mortgage loans on it? Whether I purchased it, acquired the asset by taking a loan. So you'll verify that also. Correct. Then what else you'll verify? Allocation.
Whether there are.
Tell me.
Whether there are more than one vehicle that is there in that particular account.
Completeness. You are looking for the completeness. Okay. So basically, all the questions, whatever you have asked, your intention is to obtain evidence. This evidence should satisfy your hunger as an auditor. This evidence should satisfy your soul. At the end of the day, Nirmal's mind should tell Nirmal's heart that yes, Pavan owns motor vehicles. The valuation is correct. Ownership is there. Rights and obligations are verified. Then accurately incorporated. Completeness is there, not omitted. Valuations are right, and depreciations, amortizations, allowances are properly given. So to give this kind of satisfaction to the auditor, he will ask evidence. Show me the evidence that asset exists. Show me the evidence that asset is valued correctly. Show me the evidence that you have the ownership. Show me the evidence that depreciation is proper. Show me the evidence that it has loans or it is not having any loan, whether it is a mortgaged property or unencumbered property. Evidence. Show me the evidence. For every transaction, for every account balance, if I say, Nirmal, my sales are 2 million pounds. Next second, Nirmal will say, evidence. Nirmal, I paid salaries 34,500 pounds. Evidence. Nirmal, I have created a provision. Evidence. Nirmal, I borrowed money from my friend. Evidence. Nirmal, I have raised capital through issue of shares. Evidence. Nirmal, I paid tax. Evidence. Nirmal, I am born. Evidence. Nirmal, I am dying. Evidence. Nirmal, I am hospitalized. Evidence. Because basically Nirmal is auditor. Evidence. Why? Because try to understand the procedure. Try to understand the process. I am here in this company with an objective to express an opinion on the financial statements, whether they are showing true and fair view. This opinion will be given to the members of the company. But to give that opinion, first I should satisfy myself. To satisfy myself, I use the audit evidence as the basis. BASIS. Audit evidence is the basis for audit opinion. Try to understand this. Even when you look at the published audit report of any company, you just Google it, www. Or in Google, you just search audit report of Microsoft, audit report of Alphabet, audit report of Meta, audit report of Johnson & Johnson, audit report of Imperial Tobacco, audit report of any company you take, British Petroleum, audit report of Reliance Industries, audit report of Barclays Bank. In every report, there will be one paragraph. In every audit report, there will be one paragraph. Basis for the opinion. Auditor is saying that the financial statements are showing true and fair view. On what basis you are saying it, dude? That basis is audit evidence. So I'm saying that, hey, hello, excuse me, listen. I said asset is properly valued because I obtained evidence. I said asset is existing because I obtained audit evidence. I said bank balance, is right because I obtained evidence. So try to remember this process. To express an opinion on the financial statements, I use audit evidence as the basis. That is the reason our international standard on auditing told, dear auditor, obtain sufficient, appropriate audit evidence. The auditor has to obtain sufficient, appropriate audit evidence. So open a new page, put the heading audit evidence. Under that, write down, the auditor should obtain sufficient, appropriate audit evidence. Write down, the auditor should obtain sufficient, appropriate audit evidence. The auditor should obtain sufficient, appropriate audit evidence. Sufficient, circle it. Put a circle around sufficient, circle it. Arrow mark down, single arrow mark down. Toing. Under sufficient, write down quantity. Quantity. Appropriateness, circle it. Under appropriateness, write down quality. Under sufficiency, quantity. Quantity, how much, how much. Under appropriateness, quality. Under quality, again to arrow marks down. So sufficient, appropriate audit evidence, to arrow marks down. Sufficient, appropriate. Sufficient, arrow mark down. Quantity. Appropriateness, arrow mark down. Quality. From quality, again to arrow marks down. Reliability. Relevance. From appropriateness, again to arrow marks down. Left side, reliability. Right side, relevance. Now we will understand all these things. Okay, so, hey Nirmal, you there? Say hi, please.
Hi, sir.
So, shall we start?
Okay, sir.
Can you read this? ISA 500 speaks about audit evidence, which is huge, one of the big, lengthy standards, but one of the most beautiful standards. So ISA 500 speaks about audit evidence. I'll tell you one secret. In many countries, whether you are speaking about audit in Indian context, audit in Bangladesh context, audit in Pakistan context, or audit in Europe, you go to Germany, you go to African countries, you go to Nigeria, you go to the UK, you go to US. US may be little different, I agree. US audit is little different. Globally, whether you are reading any international standard on auditing or any domestic essay, domestic standard on audit, the whole content will be copy paste. The whole content will be copy paste. For example, in this hand you take ISA, International Standard Auditing 500. In this hand you take standard on auditing 500 in India. This is International Standard on Auditing, ISA 500 audit evidence. This is Indian Standard on Auditing 500 audit evidence. Read this para, this line, this word, this letter. Verbatim reproduction as it is, it will be. So many countries have developed their domestic standards looking at international standards. This is the end of chapter 2. In chapter 2 end, last 1-2 slides, the connection between international standards and domestic standards, that also we have discussed. Same. Okay, so my dear friend, can you please start reading it?
Objective as per ISA 500 audit evidence. As per ISA 500 audit evidence, objective of auditor is to design and perform audit procedures in such a way to enable the auditor to obtain sufficient appropriate audit evidence to be able to draw reasonable conclusions on which to base the auditor's opinion.
All of you read it again. I'll give you 10 seconds of time. All of you read it again. Quality of reading is more important. Okay. I suggest you copy this in your notes. Okay. This notes is anyway available to you in your mobile application, but still I suggest you write down. Now, audit procedures, put it in box. Audit procedures, put it in box. Audit procedures, put it in box. Excuse me. Audit procedures. So Nirmal, can you read these bullet points?
Types of audit procedures: inspection, observation, external confirmation, recalculation, reperformance, analytical procedures, and inquiry.
Okay, now look at it. So let me explain one by one. This is very important. Okay. If you want to verify whether this particular Mercedes-Benz is owned by Pavan or no, you said you want to see the registration certificate of the vehicle. Isn't it RC copy you want? So I have given you my RC copy. So Nirmal, when you asked me evidence, I have given you one paper. What will you do now?
I will read through that material.
That is called inspection. That is called inspection. You'll inspect it. So inspection is of two types. Okay. Physical inspection, documentary inspection. Physical inspection means, hey, Pavan, where is your car? My car is in the garage. So could you please come with me? I just want to see your car. Okay, please come. So I have taken you to the parking lot and I said, hey, that black one is there, no, metallic black one. That is my car. Then he said, wow, this is so nice. Pavan, can I have RC copy, please? Yeah, definitely. This is the RC copy. Pavan, you have insurance also? Obviously, I have insurance, bro. Can you give me insurance copy? Hey, Pavan, have you paid road tax? Dude, what are you talking? Without road tax, how can I drive the car? This is the road tax copy. So you have RC copy with you. You have insurance with you. Nirmal, do you know how bloody costly insurance is in Europe? Per month, we have to pay around 340 pounds. That means per month you will pay 34,000 in Indian currency. That means per annum, if you count, no, it will come to 4-5 lakhs in Indian currency, with which you can buy a small car. Insurance is very costly. That too, if you have Indian driving license, Indian passport. So not only for Indians, any country, if you are not a British citizen, if you are having, global license, and if you are having a passport of other country, it is costly. So now, what Nirmal has in his hand? RC copy, insurance copy, road tax copy. Okay, and maybe sometimes pollution clearance copy will be there. Pollution clearance in some countries. Okay, now what will you do? You have done physical verification and you have documents in hand. So you'll see what is the registration number of the vehicle. Registration number, correct. What are the specifications? Mercedes-Benz, C class, C300, 300. I'm just giving example, 300. Metallic black, petrol, automatic, 2021. Okay. All the details you can cross verify. Then you will inspect all the documents, whatever you have. Inspection. This is one technique. Now, imagine you're conducting audit of Coca-Cola company, which I have done way back in India. We have conducted audit of inventory, audit of Coca-Cola, inventory audit of Bata we have done. So inventory audit of many big companies we have done. So now what do you think? Whose responsibility it is to physically verify inventory? Do you think it is management responsibility or it is the responsibility of the auditor? If you are a junior or if you are reading auditing for the first time, you will be tempted to say, sir, verifying physical inventory is the responsibility of auditor. No. Inventory, physical verification of inventory, inventory valuations, all these things are the responsibility of the management. Now just imagine you have a bakery, you are selling vegetable puffs and you are selling cookies. How many cookies you have in your counter as an auditor? Why am I concerned? I have some responsibility, but you have more responsibility. So how many cookies you have? If you are running one, if you are a chemist, if you are a druggist, if you are running a medical shop, it is your responsibility to see how many medicines of, how many quantity of this medicines are there, these injections are there, these cartridges are there, these tablets are, that is your responsibility, bro. But when client means your client company, auditee we call. So you are auditor of X Limited. X Limited has a factory. X Limited has a big godown. X Limited has a lot of inventory in the godown. When they are physically verifying inventory, as an auditor, you will go to the operations manager and you say, hey, do you take inventory count? They say, yes, sir, we take inventory count, obviously. So there are two types of inventory management systems. Okay, one is periodical verification, one is perpetual verification. Perpetual verification means you have some ERP or SAP. Periodical verification means, one person, the operations in charge, will go and see, the counter. Say, simple example, you are selling milk. Okay, you are a supermarket. You're a big supermarket. In the supermarket, you will sell milk also. Okay, now how many bottles of milk, how many packets of milk are there in the fridge? Okay, you have two systems. One is your supervisor will go to the fridge and check whether there is any stock out situation. What if all the packets are sold, there are no packets, and like an idiot, you are closing your eyes? That is very bad for your business. So supervisor, every 1 hour, every 2 hours, he will go to the fridge, he will open and see, oh, how many blue bottles are there, how many green bottles are there, how many yellow bottles are there, whole milk, skimmed milk, semi-skimmed milk, so many bottles. So he'll verify, oh, these are 20, these are 5, oh my God, these blue color bottles are over. Immediately he has to refill, replenish. So it is his responsibility to verify inventory. This is called periodical verification. Every 2 hours he'll verify. When you have inventory management system, ERP or SAP, in the computer, you can see on real-time basis. So you don't need to go and verify every 2 hours. So you will just, on a click of a button, you will see, okay, these many bottles, these many bottles, these many bottles. This is called perpetual, continuous verification. But year-end inventory verification is different. Every day you do like this. Year-end verification on 31st December 2022 evening 9 o'clock, when you are closing the shop, What inventory you have is very important for the auditor, because this will go to balance sheet as inventory figure. So year-end inventory taking is different. Everyday inventory taking is different. So when year-end inventory is being, taken, then auditor will ask. No, it is not necessary that it should be done on the balance sheet date. Okay, maybe 1 week, 2 weeks, either side you can do it. So auditor will ask the operations manager, hey, when will you do year-end inventory taking? Sir, we are doing it on 4th of Jan, sir. Okay. 4th of Jan, I'll also come. So then this auditor on 4th Jan, he will go to the godown, he will go to the factory and he'll say, hey, Peter, how are you? Auditor, sir, you came, come, please sit. Sir, you're here. Yeah, I just want to see inventory taking. Sir, will you do physical verification of inventory? No, I will not do, because it is not my duty. It is your duty. You do physical verification of inventory. Then client will ask you, then Pavan sir, what will you do? I observe, could you get me one coffee, please? Then client will give coffee, will have coffee. And then you are observing, 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 observing. So basically what you are observing is the procedure, the manner in which the inventory taking is done by the client is reasonable to a situation or no? Is it doing it properly or no? That is what you are observing. Then you are looking at it and say, these guys are very experienced, systematic, properly trained. They are doing physical verification of inventory in an excellent manner. As an auditor, I'm happy. This is what we call observation. I observe how the task is being done. I observe whether the procedures are complete or not. I observe whether the controls are there. I observe to what level the inventory verification is going to be accurate. Are these people trained to do that, or chaotic, confused characters? Are they doing it like that? That is what my point is. That is what we call observation. Observation. I obtain audit evidence through inspection. I obtain audit evidence through observation. Then next thing is external confirmation. So this is, SOFP, statement of financial position of my client. So this is the balance sheet. So in the balance sheet, my client in the balance sheet, I looked at the figure. So he said 200,000 pounds is his bank balance. What is his bank balance? 200,000 pounds. Now your cash book says you have 200,000 pounds. Your cash book says. Then I asked the client, hey bro, where do you have this cash? Sir, in bank account, sir. Hey, I know, idiot. I know that it is in bank. Which bank? Sir, we have account in Monzo Bank, sir. We have account in Lloyds Bank, sir. We have account in Barclays Bank, sir. We have in JP Morgan, sir. Okay. So I will write a request letter to the bank manager. I will write a request letter to the bank manager. So the bank manager will receive a request letter. Who's this guy? Pavan. Okay. So what is he asking? Sir, I am the auditor of X Limited. Could you please confirm whether X Limited has an account with your particular branch? And if so, please tell us what is the balance. Now a student asks, but that is against banking regulations. Why banker will tell balance? Beta, if you go and ask my bank balance, banker will not tell. But if statutory auditor, company auditor inquires, the bank will tell, because X Limited might already have authorized Lloyds Bank manager to give information. When they have appointed me 1 year back, when X Limited appointed me to be the company auditor, they might have written a letter to Lloyds Bank. Dear sir, this is to inform you that we convened our 134th AGM on so and so date. In that meeting, we have appointed Mr. Pavan Kumar to be our company auditor. The following are the details of Pavan Kumar. So his phone number, his office address, everything will be given in the letter. We authorize you. X Limited is writing letter to Lloyd's Bank manager. We authorize you to share information relating to our balances and banking operations, and we authorize you to give statement of account on request of the auditors. Regards. So when bank has received a letter from Pavan, they will open X Limited's ledger and they say, oh, these people have already authorized. They said Pavan is the auditor. Here also Pavan is the auditor. They gave the phone number and contact information. That is same lady is there on the letterhead of the Pavan. Now, they will extract a copy of X Limited's bank statement and they will send in the reply email or a physical copy to Pavan. Then Lloyd's Bank manager will write a letter. Dear Mr. Kumar, in response to your request letter, we hereby confirm that X Limited has a current account in our Selly Oak branch bearing a bank account number 12345, and on 31st December 2022 the balance in the account is 200,000 pounds. So Pavan has received this email or a physical mail from Lloyd's Bank. Now what do you think? Will Pavan rely more on the bank statement given by the client or cash book given by the client, or the letter given by the Lloyd's branch manager? Will obviously rely more on the Lloyd's branch manager's confirmation letter. No, this is called external confirmation. External confirmation normally auditors take from debtors, accounts receivable, creditors, accounts payable, customers and suppliers we call, investments, bankers. So this is called external confirmation. This is also audit evidence. Then I asked the employee of the company, hey, have you calculated depreciation for the year? Yes, sir. How you calculated? Sir, first we have taken all the names of the assets, sir. Then we took opening balances, sir. Then we took additions during the year, sir. Then we took sales, sold assets during the year, sir. Then we calculated closing balance before depreciation, sir. Then we took depreciation rate, sir. Then we calculated depreciation amount, sir. Then we calculated closing value of the asset after depreciation, sir. Sir, the total depreciation for the year is 125,000 pounds, sir. I'll ask the employee, very good. Can you please send the file to me? So he will send the Excel sheet or he will send the relevant files. I will take a calculator or I will open Excel sheet. I will copy the data. I will recalculate to check the arithmetical accuracy. This is called recalculation. What is this? This is called recalculation. That is this one. Next one is, imagine I asked my client, hey, have you got control systems in place? Yes, sir. For example, there are so many types of controls. For example, I asked you, hey, do you have passwords to your accounting package? Yeah, we do have, sir. Can you open this laptop? So I'll go to the laptop. On the desktop, there is KPM, CA Pavan. KPM is a software. So I double clicked KPM. So is it opening into the accounting information or asking for the authorization? So when I opened one Excel sheet, is it giving the information or is it asking the password? So having password is a control. Client is responsible to have a control. Client said, Pavan sir, we have control, but I will not listen to you. I will re-perform. I will run the program and I will see whether the program is running properly or not. This is called re-performance. Recalculation is for the figures, arithmetical accuracy. Re-performance is for controls. Inspection, documents, observation, procedure, external confirmation from third party obtaining. Recalculation is for accuracy. Re-performance is for controls. Analytical procedure is altogether a different accounting standard that we'll see later. Analytical procedure is a different, auditing standard on auditing that we'll see later. Inquiry has no great meaning. You are inquiring a person. You are calling a person and saying, hey, I want to know more about this account balance. I want to know more about this transaction. That is called inquiry. These are various techniques, types to obtain audit evidence. So these are known as types of audit procedures: inspection, observation, external confirmation, recalculation, reperformance, analytical review procedures, and inquiry. That's all. So this is session 1. We will continue in the next session. The balance we'll see.